Alphabet is Google. Google recently had a split 1 for 20. What does that mean? How does that benefit you? What do you understand by split? How is that beneficial to you? Is it beneficial to you or beneficial to Google itself? Who is gaining from this split and why are they splitting? Let's dive into the discussion. A lot of other stocks are also splitted in, they've had their split in the last couple of months and weeks. We've had a split of Shopify, we've had split of Amazon, and the other. I mean, last year we had Nvidia, 2 years ago we had a lot of Tesla. Now we have that of Google, which is an Alphabet Class C, 1 for 20, which brings down the price to about $125. Now let me tell you something. When a company does stock split, there are some advantage and maybe I don't want to say disadvantage, but let's look at the advantage. One, it allows you, young investors and all that, to feel good about numbers of shares you have. Comparing having a stock that the price is about $2,500 or $3,000 in your account, one stock, now you have about 20 of it for that price. It makes you feel good one way or the other. But what you really need to know, it's like you having a pizza. You have a pizza, a round pizza, and that pizza, that whole pizza is a share. It's a complete pizza. But the pizza has like different parts. It can be shared into about 10. So let's say you share that one pizza into about 10. One portion of it, that's the same way how the stock split is. You have one share, you now split it into 20. So one slice of it. So it means that you're still having that one pizza, but now it's sliced. So meaning that at the end of the day, that 20 for one is still for one. It doesn't give you extra. It doesn't deduct from the number of shares you hold. You see? So it is more of psychological, and also a very good point for Alphabet. Alphabet is not in Dow. This might be an advantage, an opportunity for Alphabet to be included in the list of companies in Dow, because Dow has, part of Dow criteria is stock shouldn't be too expensive that will carry too much weight. It's about weighted rating, so that you will carry too much weight. But when your stock is around 150, 120, 200, it still makes meaning to be added into Dow. There's much more other reasons, but for the sake of this video, let's just assume that, okay, this gives opportunity for Alphabet to be added into Dow. Apart from that, what do you gain? Guys, it's pretty much nothing. Just opportunity for you to buy a slice of the pie, which ordinarily you might not be able to have done before. Let's have a look at the charts. Let's see what we can get. Let's see what is trading off as of today. Be careful, knowing that we're still within the bear market and there's high perception of reception looming over the market. The Fed is still increasing interest rate. The next one is in a couple of days, whether it will be 0.75 base point or 1. We don't even know. But you know what? Like Larry Fink said the other day on Jim Cramer program, look, don't worry about inflation. Just invest if you want to invest. And if you're afraid of anything, you cannot own, well, you can sell out. But my advice is to hold on. We're still within the bear market, and we're not sure if we're bottom yet or not. However, let's have a look at our charts. Let's also see some fundamental information, and we are using Market Smith's platform, which also gives us advantage to see some other criteria, Warren Buffett, Peter Lynch, and others. So you can see their criteria of selection of a stock. Let's have a look.
Here is a technical chart for Alphabet Google. Alphabet recently had its split, one for uh, 20 for one. So the price as of today is trading 108. That's because Alphabet was also dragged down, the advertising business because of um, Snapchat poor performance. So it dragged most of these social media e-commerce businesses down, like including Facebook. But then here today, it has lost 3.43%, which is a $3.85. It's currently 52 weeks high is minus 28 is trading minus 28% from 52 weeks high. 52 weeks high is 152 to 102. Wow, 102. Market capitalization is 1.1425.39 billion. Um, Shares in float is 6204.9 million. Shares outstanding is 13.2 billion shares outstanding. P ratio is 22 for Alphabet. EPS rating 95. Um, Cash flow is $6.06. Then yeah, that's the P ratio. The earnings is due in 4 days. EPS due in 4 days. In 4 days, it currently trading below 200-day moving average, and this should be 14 weeks. Below 14 weeks moving average. Um, Basically, let's have a look at it on a daily chart. We can have more information on a daily chart. As you can see on a daily chart, it has actually been trading within this range. Let me draw this range. Um, we can do we can do this. It has been within this range, within this range, but it currently trading below 15-day and 50-day moving average. Obviously, because of the social media advertising business that is down, because Google is also a giant in advertising business, and it with this Snapchat earning means, it does give you an idea what may happen to Facebook and Google and the others. But then let's have a look at some other fundamental information. Let's have a look at here. We have the checklist. For Warren Buffett, Alphabet passed 16 over 16, 100%. Yeah. For you to have 100% to match the criteria of Warren Buffett for 100%, then you should understand the stock is is performing outstanding. Let's have a look at Benjamin Graham's, Benjamin Graham 10 over 13. Peter Lynch 5 over 8. The fact that it is 100% with Warren Buffett is good enough for me to add this stock to my portfolio. But guys, I'm not saying you should add it to your portfolio. I'm just saying for myself, I believe in Warren Buffett. I'm a value investor, long-term investor. You need to know whether you're a value investor or long-term investor, as we call ourselves. Otherwise, do not just go blindly following Warren Buffett. Anyway, let's go back weekly on a weekly chart. Um, Yeah, pretty much this is a buying opportunity. I see it as a buying opportunity for Alphabet, Google. If you don't have it in your portfolio before, this is the right time. I strongly believe this is the right time. I mean, it has been splitted one for 20. Now the price is reasonable for every young and new investors. But guys, do your valuation to be sure it's fit for your portfolio.
You have seen the technical analysis, and you have seen, I mean, to be honest with you, I'm quite shocked that I didn't expect that Alphabet will have, will pass all Warren Buffett's checklist. He did, so that's a good one for you to have seen that. But still carry out your own analysis to be sure, I mean, your valuation to be sure this stock is good for your portfolio. I have Alphabet, we have it in all our funds in Elite Pro, and I'm going to have more to my position since, I mean, there's an opportunity that I'm taking opportunity of the split to have more of the shares to my position. Thank you for watching this channel. Thank you for subscribing. We continue to produce content that will support your investment journey. Please call again. Thank you.